In this video, we are breaking down a high win rate day trading strategy that has been proven across 100 backtests to maintain a 75% plus win rate. What makes this powerful is the simplicity and strength. We're using just two indicators for the gainers and losers watch list that most people already have integrated in their brokerage account, such as Schwab Thinkorswim and Interactive Brokers. Using the Schwab Thinkorswim platform, we will walk you through this strategy step by step. Plus, I'm giving you text versions of certain parts of the video to pause and write down if needed to start paper trading this strategy today. Watch the entire video to see exactly how to set it up. This setup centers on the 9:45 a.m. reversal/continuation window, a critical time when the initial opening drive volatility often settles into a more sustained trend for the morning session. 1. Market sentiment and watch list selection. At 9:45 a.m., you are essentially determining whether the morning's gap or initial move has legs or if the market is rejecting the open. Determining sentiment. Look at the SPY or QQ 1-minute chart. Mark it up. If SPY is trading above its opening range high, ORH, or is green on the day at 9:45 a.m., focus on your top gainers watch list. Mark it down. If SPY is trading below its opening range low, ORL, or is red on the day at 9:45 a.m., switch to your top losers watch list. The logic. By 9:45 a.m., the amateur orders from the open are usually filled. Institutional true direction often reveals itself here. Aligning your watch list with the broader market sentiment, SPYQQQ, ensures you are trading with the wind at your back. 2. The 1-minute ADX strategy, value greater than 35. When you dive into the 1-minute time frame for your selected stocks, the average directional index, ADX, acts as your filter for trend versus chop. Why ADX over 35? While many textbooks say ADX greater than 25 is a trend, on a 1-minute chart, price moves fast and generates noise. ADX greater than 35. This indicates a strong momentum trend. It suggests that the stock isn't just drifting. It is being aggressively bought or sold, non-directional. Remember, ADX only measures strength. You must look at the plus DI and dash DI lines, or the price action itself, to confirm the direction. Execution on the 1-min chart. Metric. Condition. Action. Trend strength. A DX line greater than 35 and rising. High conviction entry signal. Momentum is accelerating. Bullish setup. Plus DI is above negative DI. Look for long entries on minor pullbacks to the 9 EMA. Bearish setup. DI is above plus DI. Look for short entries on minor pops to the 9 EMA. 3. Key considerations for this strategy. The climax warning. On a 1-minute time frame, if the ADX climbs significantly over 50, the trend may be reaching a blow-off top or exhaustion bottom. Be prepared to tighten your stop loss or take partial profits as the move is becoming unsustainable. Correlation check. Ensure your specific stock is moving in sync with the market sentiment you identified at 9:45 a.m. If the SPY is up but your gainer is starting to fade while the ADX is high, it may be a relative strength failure. VWAP alignment. For the highest probability, only go long if the stock is also above VWAP for gainers, or short if it is below VWAP for losers. Pro tip. Since you are trading the 1-minute time frame, use a 14-period ADX for smoother signals, or drop it to an 8 or 10 period if you want to catch extremely fast scalps, though this will increase the noise and potential for fakeouts. To ensure you are trading highly liquid stocks with institutional participation, adding a $100 million volume floor by 9:45 a.m. is a professional-grade filter. On the 1-minute time frame, this means the stock has already traded significant capital in just the first 15 minutes of the session. 1. The dollar volume formula. In Thinkorswim, dollar volume is calculated as the shares traded multiplied by the price. By 9:45 a.m., you want the cumulative sum of that activity to exceed $100 million. The filter logic. Today's volume. Volume. Period equals aggregation period day. Current price. Close or VWAP. Threshold. Greater than 100 million. 2. Revised strategy workflow. 9:45 a.m. Step. Action. Criteria. 1. Liquidity check. Filter watch list. Dollar volume greater than $100 million. Price times total daily volume. 2. Sentiment check. Market bias. SPY up, go to gainers. SPY down, go to losers. 3. Trend strength. 1. Min ADX greater than 35 indicates a high velocity trend. 4. Confirmation. Momentum plus DI greater than DI long, or DI greater than plus DI short. 3. ThinkScript snippet for watchlist column. If you want to create a custom watchlist column or scan in Thinkorswim to highlight these stocks automatically at 9:45 a.m., you can use this code. Formatting for the column. Scan assign value color. If scanned, then colored uptick, else color downtick. Why this 100M threshold matters at 9:45 a.m. 1. Slippage protection. Stocks with $100 million plus in volume early on have thick order books. You can enter and exit 10K minus 50K positions with minimal slippage. 2. Relative strength. Most stocks won't hit $100 million in 15 minutes. The ones that do are the stocks in play that have the eyes of the entire market. 3. ADX reliability. Indicators like ADX are much more reliable on high-volume stocks because the price movement is driven by thousands of participants rather than a few small orders gaming a low-float stock. Note on market sentiment. If the market's PY is flat or choppy at 9:45 a.m., even if a stock has $100 million volume and a high ADX, be cautious. High volume in a sideways market often leads to fakeouts, where the ADX spikes but price immediately reverses. Expanding the strategy to the 15-minute opening range breakout, ORB, adds a layer of structural stability. By 9:45 a.m., the first 15-minute candle has closed, providing the high and low boundaries you need for the rest of the morning session. Here is how to integrate the $100 million dollar volume, market sentiment, and news catalyst, excluding earnings, into a single execution plan. 1. Pre-market and 9:45 a.m. setup. Before the trade triggers, you must filter for the stock in play. The catalyst filter. Look for stocks moving on news, FDA approvals, contract wins, analyst upgrades/downgrades, or sector-wide news. Self-correction. Strictly exclude any stock that released earnings in the last 24 hours. Earnings moves are often gambles on guidance. News catalysts provide more linear trend follow-through. The liquidity filter at 9:45 a.m. Confirm the dollar volume greater than $100 million. The sentiment filter. SPY/QQQ up. Focus on the 15-minute high of your gainers. SPY/QQQ down. Focus on the 15-minute low of your losers. 2. Defining the 15-min ORB. At 9:45 a.m., draw two horizontal lines on your chart based on the price action from 9:30 a.m. to 9:45 a.m. 1. ORB high, the highest price reached in the first 15 minutes. 2. ORB low, the lowest price reached in the first 15 minutes. 3. The execution, entry and confirmation. Do not blindly buy the break. Use your 1-minute ADX and market correlation to confirm the move is real. Entry trigger. A 1-minute candle closes above the 15-minute high for longs or below the 15-minute low for shorts. Momentum confirmation. ADX greater than 35. Ensure the 1-minute ADX is over 35 and rising. This confirms the breakout has enough fuel to move away from the range. Market alignment. If you are going long on a gainer, SPY should ideally be making a higher high on its own 1-minute chart at that exact moment. The news factor. Re-verify the news. If the move is a sympathy move, following another stock, it is weaker. If it is direct news, e.g., Company X awarded $500 million contract, the breakout is high conviction. 4. Risk management. The exit. Stop loss. Tight. The 15-minute candle's midpoint. Standard. The opposite side of the 15-minute range. The ORB low for a long trade. Take profit. Target 1-to-1. 1 risk to reward. Move stop to break even here. Target 2-to-2, 1 or 3-to-1. Final exit. If ADX on the 1-minute chart crosses below 35 or the plus DI/DI lines cross over, the trend is exhausting. Flatten the position. Summary checklist at 9:45 a.m. Filter. Requirement. Catalyst. Direct news. No earnings. Liquidity. Dollar volume. Greater than $100 million. Sentiment. SPY direction equals trade direction. Structure. 1-minute close outside 15-minute range. Momentum. 1-minute ADX greater than 35. Pro tip. If the 15-minute opening range is too wide, e.g., the stock moved 5% in the first 15 minutes, the meat of the move might be gone. Look for tight 15-minute ranges for the most explosive breakouts. This adds a sophisticated layer of trade management to the strategy. By using VWAP as a hard stop and +1R as your protection trigger, you are mathematically ensuring that you don't turn a solid winner into a loser. Here is how the trade evolves from the 9:45 a.m. breakout through the management phase. 1. The entry and initial risk. R. Closing parenthesis. When the 1-minute candle closes outside the 15-minute opening range, ORB, with ADX greater than 35 and $100 million plus volume, entry price, price_entry, initial stop loss, VWAP. Note, if the stock is too far from VWAP at entry, making the risk too large, wait for a retest of the 15-minute breakout line before entering. Calculate R, the difference between your entry and VWAP. 2. The move to break even, +1R. Once the trade moves in your favor by the amount of your initial risk, arbitrage, you must protect your capital. The trigger. Price hits entry plus R for longs, or entry R for shorts. The action. Move your stop loss from VWAP to your entry price, break even. The benefit. You now have a risk-free trade. Even if the news catalyst loses steam, or the market SPY reverses, you walk away with 0 loss. 3. Dynamic management, VWAP cross. As the trade progresses, VWAP will likely trend up for gainers or down for losers. VWAP as a trailing stop. After you have moved to break even, keep an eye on the relationship between VWAP and your entry. The exit. If a 1-minute candle closes on the wrong side of VWAP, flatten the position immediately. Longs. Exit if price closes below VWAP. Shorts. Exit if price closes above VWAP. 4. Strategy workflow summary, 9:45 a.m. to 10:30 a.m. Phase. Criteria/action. Selection. News catalyst, no earnings. $100 million plus dollar volume, SPY correlation. Execution. 15-minute ORB breakout plus 1-minute ADX greater than 35. Risk. R. Closing parenthesis. Stop is placed at VWAP. Protection. Price hits +1R right arrow. Move stop to break even. Final exit. Price crosses VWAP or ADX falls below 35. Why this works for your style. VWAP protection. Since you are trading high-volume stocks, $100 million plus, VWAP is the institutional average. If the price drops below it, the institutions are no longer supporting the move, and the news catalyst is likely failing. The +1R rule. High momentum stocks, ADX greater than 35, should move quickly. If it gives you 1 R of profit and then comes all the way back to your entry, the momentum has shifted, and you don't want to be in the chop. Trade note: because you are using a 1-minute chart, watch for a confirmed close past VWAP. A wick through VWAP is often just a test of liquidity, while a full candle body closed below it usually signals a trend change.